We have Vinay Rajani of HDFC Securities joining us, along with Ruchit Jain, who's joining us from Motilal Oswal Financial Services, and of course, Deepak is back with us as well. Good afternoon to everybody. And Vinay, let me come to you first on the technicals. Very near term right now for the next 45 minutes or so. Do you believe that we could gain some more strength? How has the intraday chart shaped up for the Nifty for you, and what are your thoughts on that?
Yeah, good afternoon. So as far as intraday is concerned, since morning breadth has been coming down now, advanced decline ratio, as we can see in the morning, advance were much above the declines, but now it is almost similar. So breadth has come down. Confidence is not there. Momentum is lacking in the market, but somehow I feel that 24,850 has been the very strong support. It is derived from the 20 and 50 days exponential moving average. There has been a gap up. There was a gap between the range of 24,673 to 24,850. So there are cluster of supports which are lying in the range of 24,750 to 850. So that should hold, I think. And whatever fall which we have seen in the last week, in last two trading session, that was 300 points fall. I feel that that is a running correction in overall bullish trend. So overall market should do well only. Global markets have been performing very well. We have been underperforming till now, but I feel that this should hold 24,800, 700 range should not break. And with that stop loss, we are advising our clients to remain long in the markets, and many stocks are performing also. They are hitting 52-week highs and new all-time highs. So it is not like panic is there in the market. So broader market selectively doing good. You have to be right in stock selection, otherwise markets are good only. So as far as Nifty is concerned, 24,800 we are suggesting as a stop loss, and we are expecting this 25,160, whatever the high was there in recent days, that will be taken out soon. So overall bias is on the bullish side.
Continue to hold that bullish thought when it comes to Nifty 50. But Ruchit, let me come to you to have your take on the star performer for today sectorally, and that is the IT pack. We have seen very good moves, and it's not just the large cap IT names, the mid and small end of the market is also seen to be participating. Though Deepak just shared his thought fundamentally, but how is the technical setup looking like, and any stocks within the pack that looked attractive? Good afternoon.
Yeah, hi, very good afternoon to everyone. No, IT space, we have seen a significant underperformance compared to the broader markets in last few months. And post the recent correction where the index had corrected from this high of 39,500 to 34,000 without any meaningful pullback, the momentum readings were oversold, and hence we are witnessing a pullback move because of this oversold setups. So it's very early to say that the stocks have bottomed out and have started a fresh uptrend. But what we believe that post such correction and oversold setups, the trend usually initially changes from down to sideways. So we believe that this would slip into some consolidation phase for the IT names, and because we were at the lower end of the range, and hence we are witnessing this pullback move, which could get extended towards 37,000, 37,500 kind of range. Now, within the IT space, if you look at the stock specific moves, then Emphasis is one stock which clearly stands out, compared to other names within the sector. When the entire sector has seen a sharp correction, and even the large cap names and most of the mid cap names, have traded at low levels, Emphasis did not break even its 200-day moving average when the entire sector was going down. And relatively, the correction was much lower at those levels. So I think when the sector was not doing good, this was one stock where the prices were not correcting. Stock was holding above its support zone. And when there is a pullback move in the sector, we believe that Emphasis should see an outperformance compared to other stocks within the sector. So if one has to pick any stock, then Emphasis can be bought even at current levels with stop loss below 2,800 kind of level. For a short-term trade, one can expect levels around 3,100 to 3,150.
Okay, so that's the take on TCS, some of the IT counters in focus as well. But before we move on, just want to address the flash on the bottom of the screen. On the ticker, that's an 80 now exclusive coming for you. Big relief is expected for the agriculture and allied sectors under GST. Significant GST reduction is also likely on farming machinery, and GST on tractors may be reduced to 5% from the existing 12%. We'll get in our reporter Prakash very soon to share more details on this. But in the meanwhile, let's shift focus and talk about a sector that's up in a buzz today. And along with IT, it's the entire sub-pocket of paper stocks that are on a tear in today's trading session as the government has imposed minimum import price on paper boards. Let's go across to Sharat to get us all the key triggers that have aided all of these paper stocks today. Sharat.
Well, the paper stocks are on a tear, be it JK Paper, Andhra Paper, TNPL, and even West Coast Paper, all the stocks buzzing in trade. The most important news flow coming in for this sector during the weekend is that government has imposed the minimum import prices on virgin multi-layer paperboard. Now, this amendment has happened for the import policy under Chapter 48. Now, interestingly, the raw material prices are stable for the paper and the packaging industry, and the larger packaging demand is expected to kick in for the festive season as well. And generally, this happens in the second quarter. And initially, for the festive season, as per channel checks, suggested that there's a big demand coming for the packaging segment. Also, there are certain segments where the capacity expansions are also taking place. And do remember, seasonally, the third quarter and the fourth quarter is stronger when it comes to the paper industry and packaging, to be precise. Interestingly, the education and the NCERT syllabus change is also happening, where it will drive more demand for the books, and that's why the second order effect would be coming on the papers as well. So net, strong positive triggers coming for the paper stocks, but these stocks have been on a tear in the day's trade.
All right, thank you so much, Sharath, for getting us all those details. Yes, of course, the paper stocks are on tear. A lot of these stocks, which are indeed quite volatile in nature as well. See, look at the move today. It's been a 15 to 18% jump all across the board coming in for the paper counters. But on the bottom of your screen, our reporter Prakash has got you a very interesting update, and specifically with respect to the dairy machinery GST, which has been brought to like 5% right now, and along with that, the GST on the machinery parts, such as those related to the farm and the equipment sector, from 12% that will be slashed to 5%. Deepak, wanted to have your take on this one, because possibly this particular news flow could bode very well for companies like Escorts as well as M&M, because they are the leaders in the tractor space. Deepak, we have been talking, and this news is obviously in the markets, that how this can really bode well for the auto sector. It's not just the two-wheelers, four-wheelers could be beneficiary, but a substantial cut from 12% to 5%. Isn't that a big one for the farmers and the rural economy as a whole?
So it's actually quite complicated, Yashashri, because what happens is your GST that you are able to charge your customers, you have to use that to offset whatever GST you pay on your inputs. If your inputs are at 18% on services and 12% on some other things, but your output is going to be realizable only at 5%, then you may not get the complete offset. And then what will happen is the list price of the car or the tractor or the whatever may actually increase. So to give you an idea, something that's, let's say, 10 lakh rupees, you put a 5% GST on it, it costs 10 lakh 50,000. And that 50,000 is the GST you're supposed to collect. Now, let us say it cost you, I don't know, maybe 8 lakhs to make the car. But on 8 lakhs, you paid a blended GST rate of maybe 15%, services and other stuff. So 15% on 8 lakhs is about roughly about 1,20,000 rupees. Now, you're collecting 50,000 rupees GST, but your inputs GST is 1,20,000 rupees. There's a 70,000 rupee gap that wasn't there earlier. And therefore, what typically they will do is increase the list price from 10 lakhs to maybe 10 lakh 50,000 or 10 lakh 70,000, just to correct the fact that you're not able to make up that GST differential anymore. And that is why this may not be useful unless this 5% GST also applies to the inputs used in making tractors, whether it is steel or engines or sensors or whatever else that is there. If those inputs cost more than 5%, then this may not result in a major saving for people who are buying tractors. So they'll have to kind of figure out a comprehensive approach to the GST thing, other than just saying, oh, tractors only will cost 5%, but everything else will be 12 and 18%. Then it doesn't make so much of a difference.